A very good morning, students. Welcome back to the virtual class. So today we are discussing about the topic control procedure. Okay. So control procedure has to state three important things. Okay. The first one is assertion tested. Okay. It has to state about the assertion tested, audit procedure, reason for the procedures. So every procedure must state these three things. Okay, so we'll discuss in detail each procedure. Okay, let's take up the first one, that is identifying the assertion tested. See, audit procedures are performed in order to test the financial assertions. Therefore, the first step in explaining an audit procedure is to identify the assertion that need to be tested. Okay, the assertion embodied in the financial statement as used by the auditor to consider the different types of potential misstatements that may occur or may take the following. See here, the potential misstatements can happen in following forms. Okay, so we'll know what is this. Okay, the first one is completeness. See, completeness is um, it means that all transactions have to be recorded in the financial statement. So here financial statement should include all the transactions of all assets, liabilities, equity, interest, capitals and reserves and other disclosures. Okay, everything has to be disclosed in the financial statement, then only it will be treated or termed as a completeness of financial statement. Okay, that is the first thing. Okay, assertion tested should be complete. Okay, then occurrence. See, occurrence is assertion. This means the transactions and events and other matters that have been recorded actually took place and related to the organization. So occurrence has to include the event which were actually took place in that particular organization. Okay, and which has been that has to be recorded in the occurrence. Okay, then occurrence has to be recorded in the financial statement. Financial statement should be complete. It should include all the things. Okay, then the valuation and allocation. See, valuation and allocation means all items have been included in the financial statement at appropriate amount according to the company policies and the relevant financial reporting framework. Okay, so here valuation and allocation should be according to the company policies, and whatever the amount you are recording, that should be accurate according to company policies. Okay, then classification and understanding. See, classification and understanding, financial information is appropriately presented and disclosed. Okay, disclosures are clearly expressed, so has to take them understandable to the users. So it should be classified. The proper classification has to be done while recording the things in the financial statement, and should be understandable to all the people. Okay, then accuracy. So accuracy is means that amounts and other data relating to the transactions and event have been recorded at the correct amount, that is at the amount appeared in the sources document. So whatever the amount you are recording, that should be equal to the amount which has been recorded in the sources document. Okay, it should be match each other. That's why accuracy should be must while recording the amounts in the financial statement. Then we have rights and obligations. Rights and obligations means that the entity has a right to its assets. It is free to use or dispose of the assets as it seems fit. Okay, so the entity is obliged to pay off the liabilities that are shown in the statement of financial position. So here the entity should have a right to use the asset or to dispose the asset if it is not fit for that particular organization. At the same time, they have an obligations to pay off the liabilities of the company. Okay, that is rights and obligations of the company. So the first assertion step should include all these things, and if there is any potential misstatement with respect to these things, has to be identified, or that has to be tested. Okay, shall we take up the next step, that is Identifying the audit procedure. See, identifying the audit procedure can be happened in the second step with this. Okay, so that is analytical procedure, inquiry and confirmation directly from a third party, that is inquiry, inspection of records and assets, observation, recalculation, and reperformance. So these are all the things which will going to happen in the second step. Okay, that is, okay, we will know what is this analytical procedure first. Okay, analytical procedures are used throughout the audit process and are conducted for the two purposes. One is for primary and another one is for secondary. So analytical procedure is we can see throughout the audit process, and this can be happen in two different purposes. First is primary and second one is secondary. See, when it comes to primary, the risk assessment to direct attention to higher risk areas and determining the nature, timing, and extent of audit procedures. Okay, the risk assertion to identify the risk assessment or substantive testing, and overall conclusion to assist in assessing the um, audit conclusions. Okay, so that has to be done in the primary analytical procedure, primary purpose. The secondary purpose of this analytical procedure is to understanding the business, to deepen our understanding of the entity. So we have to understand the business. Okay, then entity communication to develop the more meaningful entity communication. Okay, throughout the deeper understanding of a relevant business and audit issues. Okay, then when it comes to inquiry, okay, so inquiry is used throughout the engagement to obtain knowledge of the entity, develop the preliminary audit approach, collect specific evidence, and corroborate evidence allocated by the by other means. Okay, so inquiry has to be needed for all these things: obtaining a knowledge, developing a preliminary audit approach, then collection of specific evidence, as well as collaborating evidence collected by other means. Then next we have inspection of records and assets. See, inspection of record and assets considers the knowledge, objectives, experience, responsibility, and qualifications of the individual to be interviewed. Then asking clear and concise questions to them. Okay, using open or closed question appropriately, listening actively and effectively, maintaining a spectacle mindset. Okay, and evaluating the interviewer's responses based on our understanding of the entity and other audit procedures performed, and asking follow-up questions. Okay, inspections includes all these things. Then we have observation. Observation of the application of a client's entity policies or procedures provide assurance of that procedure at a given point in time, but not necessarily of its performance at other time during the year. Okay, then recalculation and reperformance. We have computation or recalculation provide a high level of assurance regarding arithmetical accuracy. That means whatever calculations you have already done, for that again you are doing the recalculation so that you are getting a arithmetical accuracy. Then reperformance technique may be performed manually or throughout the use of computer assisted audit techniques. Okay, so this is with respect to the step 2. Then we have a third one, that is so here we have to note down certain things while writing the audit procedure. The first one is write it clearly. So whatever the audit procedure, it should be written in such a way that even a junior auditor will be able to understand what is to be done. Okay, so that is the first one. Then write down the reason for performing the audit procedure. So here What is the reason behind the performing audit procedure has to be written properly? Okay, checking goods received notes. What is the reason of conducting that audit procedure has to be specified. Okay, so the example may be checking goods received notes. The goods received notes are to be checked like that. Okay, then use audit terminology. So using audit terminologies is very important so that it can be easily understandable by other auditors. Okay, like agree, trace to mean, matching information from two document or records like that. Okay, next we have test control. The next concept is the three procedures what we have discussed is the three important steps which has to be included in audit procedures. The next topic is test control. So what is this test control we have to know? Okay, an auditor tests the controls the company has set up for sales cycle to determine how strong and reliable they are. uh, if they are strong, the auditor can reduce the amount of transaction testing he must do. Okay, so here test control is see, auditor has to examine the books of account. At the same time he has to do some testing, that is testing of documents, the reliability, accuracy of financial statement, everything. Okay, so here this test control has set up for the sales cycle to determine how strong and reliable they are. Okay, so here we're going to have a testing procedure, that is control objective and control procedure for each and every items in the financial state. For some particular items, the first one is testing for sales system. Okay, so testing for sales system means the testing which has to be conducted to know about the accuracy of the sales systems in the organization. So here is a certain objective why we have to conduct a sales system. Control objective, we will term it as, for many businesses sales are made on credit and so subjective for the sales cycle includes control data as well. Okay, so that's why they're going to have a sales objective. Then we have control objective includes the following. Okay, customer order should be authorized, controlled and recorded in order to execute them promptly, goods shipped and work completed, goods returned and claimed by customers, invoice and creditors, authorized customer transaction, and only those transactions should be accurately entered in the accounting records. Okay, all these things will be include, they have to verify whether these things have been properly recorded in the sales systems or not. Okay, then we have control procedure over sales and data. As I told you, see, for whatever the item we are considering here, we are discussing here, it is having control objective as well as a control procedure for it. Okay, so here we have control procedure over sales and debtors. There are a large number of controls that may be required in the sales cycle due to the importance of this area in any businesses and the possible opportunity that exists for diverting sales and cash receipts away from the businesses. Typically, control procedure at key stages of sales cycles are, we have the following. Okay, the first one is orders. So your existing customer should be allocated a credit limit, should be ascertained whether this limit is to be exceeded if the new order is accepted. Okay, they have to cross check this, or they have to collect all these things. Okay, then any new customer should be referred to the credit control department before the order is accepted, that has to be checked. Then all order received should be recorded on pre-numbered sales order document so that a check can be made that all orders have been dealt with the completeness checks. Okay, then all orders should be authorized before any goods are dispatched. Then the sales order document should be used to produce a dispatch note for the goods outwards department. No goods may be dispatched without a dispatch note. Okay, these are all the things which has to be focused when it comes to order. This is the procedures they have to follow with respect to sales order. Then we have a dispatch. What procedures they have to follow when while dispatching a goods. Okay, so dispatch note should be pre-numbered and a register kept of them to enable them to be matched with related to sales invoice and customer order. Okay, dispatch notes should be authorized before goods leaves the company. Regular checks should be made to ensure that all dispatches have been invoiced. And then when it comes to invoicing and credit notes, so here sales invoice should be authorized by the responsible official and matched with the authorized order and dispatch notes. Then all invoice and credit notes should be entered in day books, records, the sales ledger and sales ledger control account. Then sales invoice and credit notes should be checked for price. Okay, all invoice and credit notes should be serially pre-numbered and regular checking should be carried out. Then credit notes should be authorized by the someone unconnected with dispatch or sales ledger functions. Then copy of cancelled invoice should be retained. Then any cancellation of an invoice should lead to a cancellation of a related dispatch note also. Okay, then cancelled invoice should be signed by the responsible officials. Each invoice should distinguish between different types of sales and, if relevant, different rates of VAT or sales tax. Okay, any coding of invoice should be periodically checked independently. So this is all with respect to invoicing and credit notes. Then we have a written invoice. See, return inwards, the procedure the organization has to follow is any goods returned by the customer should be checked for obvious damage and when accepted. A document should be raised. Okay, then all goods returned should be used to prepare appropriate credit notes. That is with respect to returns. Then receivables we have. Okay, for receivables, a receivable as well as a bad debts, for both I am telling. Okay, so receivable ledger control account should be prepared regularly and checked to individual sales ledger balances by an independent official. Okay, receivable ledger personnel should be independent of dispatch and cash receipt function. Statement should be sent regularly to the customers and formal procedure should exist for follow up overdue debts, which should be highlighted either by the preparation of an age list of balances by preparation of regular customer statements. Then letter should be sent to customer for collection of overdue debts. A policy should be in place for an institution for legal proceeds where appropriate. Okay, this is all with respect to receivables and debtors. Okay, um, the objective as well as procedures the company has to follow while dealing with the sales and debtors. Then we have a testing the non-current assets. See, testing non-current assets also have a control objectives as well as a control procedures. Okay, we'll discuss this, and this is very important from your examination point of view. Okay, try to understand this. Okay, so non-current assets, so here there are certain control objectives for non-current assets. Non-current assets are correctly recorded, adequately secured and properly maintained. Okay, then acquisition and disposal of non-current assets are properly authorized. Then acquisition and disposal of non-current assets are for the most favorable price possible. Okay, this is the control objectives. The non-current assets are properly recorded, appropriately depreciated and written down necessary for the non-current asset. These are all the objectives, control objectives with respect to non-current assets. Then we have a control procedure for this. Okay, so the first one is annual capital expenditure budget should be prepared by someone directly responsible to the board of directors. Then such budget should, if acceptable, be agreed by the board and put in the minutes. Okay, application for authorities to incur capital expenditure should be submitted to the board of approval and should contain reasons for expenditure, estimated cost, and any non-current asset replaced. Then a document should show what is to be acquired and be signed as authorized by the board or an authorized official. Non-current assets manufactured or constructed by the company itself should be separately identifiable in the company's costing record and should reflect direct cost, um, relevant overhead, but not include any profit. Okay, then disposal of non-current assets should be authorized and any procedure from sale should be relating to the authority. Assets should be properly maintained and adequately insured. Depreciation rate should be authorized and written statement of policy procedure. Depreciation should be reviewed annually to assess the needs for changes in the lights of profit or losses on disposal, new technologies, etc. Then calculation of depreciation should be checked for accuracy. Okay, then we have non-current assets should be reviewed for the need of any write-downs. Okay, these are all the control procedure which has to be followed with respect to non-current assets. Then we have testing of inventory control. This is also very important. Okay, have a look on this. Then control objectives. See, inventory records may vary considerably from client to client. The controls are the same in all cases, namely authorization and purchase procedure, control over goods inventory record supported by physical inventory counts, control over dispatches and goods outward. Adequate steps should be taken to identify all inventories for which provisions may be required on the grounds that they are net realizable values below cost. Then inventory level should be controlled so that materials are available when required by inventory is not necessarily large. Okay, these are all the control objectives. Then we have control procedure over inventory. So control procedures under inventory will happen with four different stages. The first one is approval and control of documents. Okay, so under that, issues from inventory should be made only on proper authorized requisition. Then review of damages, obsolete and slow moving inventory should be carried out. Then any write off should be authorized. Then we have arithmetical accuracy of inventory with respect to all receipts and issues should be recorded on inventory record, cross reference to the appropriate um, GRN or requisition document. Okay, then we have costing department should allocate direct and overhead cost to the value of work in progress according to the stages of completion reached. Then to do the standard costs are normally used. Such standards must be regularly reviewed to ensure that they are relating to actual cost being incurred. If the value of work in progress is directly comparable with the number of units produced, check should be periodically be made of actual units against work in progress records. So this is with respect to arithmetical accuracy. Then we have control accounts. Okay, control accounts, total inventory record may be maintained and integrated with the main accounting system if they should be reconciled to detailed inventory records and discrepancies investigated. Okay, then comparison of assets to record. Okay, so here inventory level should be periodically checked against the records by a person independent of the store personnel and material differences investigated. Then when perpetual inventory records are not kept adequately, a full inventory count should be held at least once a year. Okay, then minimum Maximum and minimum inventory levels should be predetermined and regularly reviewed for adequacy. Then reorder quantity should be predetermined and regularly reviewed adequately. So this is all with respect to comparison of assets to records. Okay, then assets and records. See, mm, separate center should be identified at which goods are held. Then deliveries of goods from suppliers should be passed through good inward section to the stores. All goods should pass through stores and hence be recorded and checked as received. Then inventory should be held in their locations so that they are safe from damage or theft. All inventory lines should be identified and held together. Access to the stores should be restricted. So all these procedures the company has to follow for the effective management of inventory. Okay, so this is all with respect to control objectives and control procedure while testing the inventories. Okay, thank you. Kindly go through with the video once again if you have any doubts. Okay, so inventory control as well as non-current assets are very important concepts. Okay, thank you for watching the video.